Right folks, it's the 1st of September. I haven't done a video for quite a long time. I must admit I didn't do many through August because there really wasn't much to report. Markets were pretty much just trading sideways, erratic, random, and there weren't any interesting levels to point out to you. But we've got an interesting development in the US dollar index now. So this is a daily chart. You can see why it was so difficult to trade the dollar alone throughout August. No clear pattern, no clear trend. As I said, erratic. But now look, we have got a significant breakout from Friday. We've broken above an important trend line which dates back to November 2018. You can see we spiked above it before on the 2nd of August, but we didn't manage to close above it, so that was a false break. But now we've managed to close the day, the week, and the month with this Friday close above the trend line, which is at 98.80. So as long as we hold above 98.80, 98.70, this looks very positive for the US dollar. When you look at the weekly chart, there is a trend to follow. Just going to open this out. You can see we are actually in a bull trend. It hasn't felt like it for the past few months, or really hasn't felt like it much throughout the whole of this year. But you can see we've been in a bull trend since the beginning of 2018, the end of January 2018. And now it looks like this is going to continue, especially with this clear break above the spike high at the beginning of August. So we're looking for the test of this trend line at 93.35. Then above there we can head up to 99.85. So the 100 level is going to be a psychological level, of course, but if we can push up through there, we're looking at 100.50 quite quickly, I would imagine. Okay, when I scrunch the chart up back to 2001, you can see we've got a very significant trend line there, and that intersects quite nicely with that 100.50 level, so that will be a major resistance level when we get there. So back to the daily chart, the trend line comes in around 98.80, so we really must hold above 98.80. We start, if you're trying along, I would suggest maybe a stop below 96.60. What's this high up here? That's 98.33, so that's not much good. This little peak up here is 98.68, so yeah, I think a stop below 98.60 should give you enough room. Weekly chart for the Aussie US dollar going back a few years shows we're very clearly in a bear trend, and certainly over the last year and a half, or year to 9 months, we've been in a significant bear trend, so we don't want to fight that trend, especially with the US dollar looking like it will push higher against most currencies. So we have something of a double bottom here with these spike lows, but we're not getting much of a rally on the back of that little double bottom pattern. So just watch for the break below 66.70 to signal the next leg lower in the Aussie dollar. New Zealand dollar in a very significant bear trend, as you can see, especially over the last month and a half. A quick look at the weekly chart shows that we're heading towards the 2015 low. So that is around 62.30, 62.40, 62.30. That will be a well, it's the only level of importance at the moment. So if that holds, we'll have a decent bounce, but you've got to wonder if that will break now with the potential strength in the US dollar and start yet another leg lower in this pair. Dollar yen in very much a sideways trend when you look at the weekly chart. Obviously the yen has been benefiting from safe haven status lately, with stock markets wobbly over the trade war. We've had a small bounce back in the US dollar against the Japanese yen, although not very significant when you consider how the stock markets have had a fantastic recovery. So we'll see what happens. But I guess the levels to watch here are these recent highs, which are up around the 106.70, 106.80 level. The euro is usually the main currency that suffers when the dollar heads higher, or when the dollar index heads higher, I should say. So not a surprise to see the euro breaking low. We've got a good trend line down here, which is just holding, going back to November 2017, almost a 2-year-old trend line, coming in at 109.49. Where did we get to? 109.61. So certainly we are testing that trend line around the 109.50 level. That is the only level of support that is worth paying any attention to this week. So we start breaking below 109.40, 109.30. That's going to be negative for the US dollar, and I've got a feeling that will happen. Now, in my opinion, the Canadian dollar has been an absolute nightmare to trade against the US dollar. We broke out of this upward channel, which was about a month old, from the middle of July to the middle of August, but we haven't had a breakdown. We can't seem to get through the 100 and 200 day moving averages here, the red line and the blue line, and we've broken below this channel, but we're not collapsing. So I'm confused with that one. Gold, I warned that this negative candle on the 26th of August signaled some potential sideways action, some consolidation of the bull trend, and that's exactly what we've had ever since. We dipped a little bit on Friday down to 1517. I think we could head a little bit lower. It does look like this stochastic is trending a little bit lower, so a further correction wouldn't surprise me at all, especially after this negative candle on the weekly chart. So once we had the Friday close, you can see we had the new high, lower close, reversal indicator, that is, in overbought conditions on the weekly chart. So for me, risks are to the downside in gold. If you've been following my gold silver report, you'll know that in silver I was looking for us to sell into shorts at 1860 to 1865. I did say it was a high risk strategy in such a strong recent bull trend, but for the brave, that trade certainly worked. Now, that's the high in 2017 that we rejected last week. As you can see at the bottom of the chart there, stochastic's very overbought. We had a fairly negative candle again on Thursday with the spike higher and the lower close. A bit of a recovery on Friday, but we'd have to get well up through 1870 for me to turn bullish on silver again. I think the risks for silver are to the downside too. US stock markets are actually remarkably stable. This is the E-mini S&P. Now you can see through August we were mostly trading sideways, and when you consider how much concern there is in the media about global slowdown, trade war, or all the nasty stuff on the downside for stock markets, this is just remarkable. And by Friday we retested the highs of the range, getting up to 2946, actually perfectly testing the highs of the recent range. Almost breaking through them. The previous high was 29.44. We got to 29.46. So for some reason these stock markets just don't want to go down. The risk is that we're forming the right shoulder of a head and shoulders pattern. So the risk is that this is the left shoulder, this is the head, and then this is the right shoulder. So the neckline is down here a long way away at 27.96. So we've got a good 130 points to drop before we even test the 200-day moving average, the red line, and the neckline to it, or potential neckline to a head and shoulders pattern. Right now, I wouldn't bet on the stock markets collapsing. I think more sideways action looks likely as we wait for developments in this trade war. Similar picture for the Nasdaq. Obviously, again, we've got a trend line all the way down at 73.40, 200-day moving average at 72.76. So for me, this is the major support level. But for now, we're just trading sideways. Dow Jones looking remarkably strong, actually. We used the red 200-day moving average as support in the middle of the week. We pushed up through the 100-day moving average, which was doing a pretty good job, the blue line, as resistance now, but we're well through that and we've closed above it. So actually the Dow Jones looks more positive than the other two markets. There must be some shorts in this market and they're getting nicely squeezed. A push up through the 55-day moving average, which is around 26,550, 570, looks pretty positive. So I think these shorts are going to get squeezed further. Economic numbers out of Germany look pretty negative. Europe in general not doing particularly well, but the DAX doesn't care. The DAX certainly broke up through that range higher around the 11,850 level, pushed all the way up to 11,985. So again, this actually looks really quite positive, despite the fact that we're heading into overbought territory. Watch what goes on at around 12,080, 12,100. That looks like the next strong resistance level. Then we've got 12,215. Bitcoin is a market that I used to follow quite religiously, and on a technical basis, it was a fantastic market. Technically, it traded so well. Lately, I gave up on it, but I think, well, my subscribers had lost interest in it. But it's worth having another look. 61.8% fib at 13,350 was the level that held this market. We overran as far as 13,880, but that's not a big deal, not a big overrun. The next time we tried it, we only got to 13,200. So that 61.8% fib certainly has had a significant effect on the recovery. Now, since then, we've just traded sideways. If we look at the daily chart, you can see that we're forming a descending triangle, which is usually a bearish pattern. We're about to get a moving average crossover here with the 55-day looking like it's going to cross below the 100-day moving average quite soon, unless we get a very significant rally. In fact, a rally up really through this trend line at 11,270, and I don't really see that happening, or 11,300 anyway. I would be surprised more likely to me it looks like a break below 9,300, or in particular below 9,000, would be a nice little sell signal for Bitcoin. I think this is a bounce in a bear trend. Anyone that's followed me for a few years knows that I don't really believe in Bitcoin, and I just don't see how this is an investment. Certainly it didn't perform well as a safe haven when stock markets were collapsing. That doesn't surprise me. It never has done. I don't know why people seem to think that it will be a safe haven like gold or the yen. It never is. It never works. So watch for a break below 9,000. I think that will be a sell signal, and I think the longer term bear trend will resume. We're looking at 75.50 quite easily, I think, as a target on the downside. So there is some good profit potential on a break below 9,000. If you want to subscribe to our service, go to daytradeideas.co.uk. If you would like daily technical analysis with trade signals, our premium subscription provides videos such as the one you have just been watching throughout the week, with a spreadsheet of trade ideas, the best trade ideas I can find for each day. This is actually a website which is about to go offline and be replaced with my new website, so I'll send you out a video of that during the week when it's finally launched. Because I post daily videos of my technical analysis and trade ideas, I'm asked every week which platform I use. So I use Metastock. I've used this for as many years as I can remember. I've tried so many different platforms, but this is by far the best. The main reason is because the quality of the data is just excellent. That's obviously the most important thing for a technical analyst. You've got to have quality data. The other thing is I can have as many windows open as I want, so that I can look at multiple time frames all at the same time. This is absolutely critical for me. It allows me to see all the different levels in all the different time frames, so I can see which line up and which would be the best levels to trade. So I've squashed this onto one screen. I usually have this spread out over 2 or 3 screens, but I can't record them all at the same time. So this is why I've shown you this. Now I'm going to just widen it out so you can sort of see what my main screen looks like. So I'll have 3 time frames on my main screen. So I've got the weekly, which I can quickly switch to the monthly, which I'll do maybe once a week, once every 2 weeks, just to keep an eye on whatever levels might be important to me there. And then I've got the daily chart and the hourly chart, and on my other screen I've got the 4-hour chart. So I can very quickly look at all the different time frames, and I can compare them, and then I can blow up. I can sort of expand one screen if I want to. So for example, if I'm trading very short term throughout the day and I want to have a look at the 4-hour chart, then I can quickly do that. Now, one of the other most important things that I can show you is on other platforms I've used, you put in a trend line and then you change the time period, and the trend line jumps all over the place and it's not relevant. You have to keep redrawing your trend lines. This is just frustrating and a waste of time. With Metastock, that doesn't happen. You can quickly switch time frames, as I've just done. I'm now on the 30-minute, and as you can see, the trend line is absolutely bang on accurate still. So this is another big plus. If I go to 10 minutes, once this loads, you'll see that the trend line again is absolutely bang on the data. So it's just simple to use. It's very straightforward. The data is very accurate. The trend lines and all the tools are very accurate. I know that when I pick a level, I can absolutely. I do believe that. Well, my subscribers tell me that it's amazing how I manage to pick pinpoint levels, and really, it's all down to this system that allows me to do that. So it's worth paying a little bit of money out to get the right data. You're going to make that back within one trade. Do yourself a favor, go to the metastock.com page, which gives you all the information you need. This system can scan markets with your criteria to find trades for you. You can backtest with it. It's really quite incredible. Go to the Metastock homepage, click on what is Metastock, and it'll take you to this page, and you can watch the video about it. All the information is there. When you're ready for a 1-week free trial, just go to metastock.com/daytradeideas. You won't regret it.